session today. Chris Weston from IG in Melbourne's been watching the unfolding story in the US and joined the people with their bells there at the end. Chris, what did you make of the session?
Yeah, they got very excited, didn't they?
They do.
Yeah, I mean, look, what was it really premised on? I think for me, the main situation is what people are trying to second guess about what's going to happen at this IMF conference, the research conference over the next couple of days, and what that's actually generally going to mean for US monetary policy later on. There's a white paper, a couple of papers that have been coming out on the Fed's website from the two most senior advisors or research advisors to the Fed. They can't vote obviously on monetary policy, but they can influence it very heavily, and they're talking about relying potentially less on QE further down the line and actually looking to strengthen the forward guidance with what they have with regards to the Fed funds rate and the thresholds around that. So for me, that's the major issue there. If you look at the moves, the steepening of the yield curve the last couple of days, it's clear that the market's getting quite excited about that. I think the prospect in March is that the Fed may say that we're happy to let inflation overrun if they do see inflationary forces coming through, but potentially what we're going to do is look to lower our unemployment threshold from 6.5%, perhaps down to 6%. I've even seen calls down as low as 5.5% to try and give it that much more credibility and affect the short end of the curve, which has a much more aggressive influence on the Fed funds rate, for example. So that's what I think really the market's getting excited about, is these two research academics who have been very influential over monetary policy, potentially looking to strengthen the Fed's forward guidance longer term, hence the reaction in the bond market, hence the reaction in the stock market as well. And I think that's really the major issue and why the Dow's trading at all-time highs. The S&P's not a million miles now from where I had been expecting to see some profit takers coming through around that 1780 level.
People also, Chris, getting pretty excited by the sheer volume of IPOs going through the US market, very much led by the big one tomorrow in Twitter. Keep seeing these potential valuations upgraded. What are you expecting when it does finally hit the boards?
Well, I think people are expecting a pretty good day. You know, there's not been a million. You know, I think the last few IPOs have done quite well. Facebook, I mean, on the first day of listing, I think rallied 1%. So I don't think you can use that as a good guide. Our clients, we've been running a global grey market on Twitter for some time, a number of weeks now, and our clients expect it to trade somewhere around about $41 on listing, which is double, I think. So, you know, I think whether or not that comes out to be true, you know, certainly global clients for us have been suggesting that they're looking at things like Royal Mail and bits and pieces, and they expect it to come out with very, very strong demand. I think it's interesting to see that, you know, I think there's going to be something like 550 million shares on issue. With, you know, let's face it, the underwriters can still take out a green shoe issue if they want. But I think if let's use the valuation, which most people are running with at the moment, that it's going to list on around $27. That puts it on about 11.8 times forward sales, which, you know, you can't manipulate sales, you can manipulate EPS, but that puts it on a slightly higher valuation than Facebook on their forward metrics on the consensus there, and certainly significantly higher above Google at 6.1 times. So for me, if it gets up to $41, then it's going to be trading pretty much on a double valuation from Facebook. It is slightly different from Facebook for me, premised on the fact that they source a lot less of their revenues, their ad revenues, from outside of the US. They get about 25% of their revenues from outside of the US, whereas Facebook get over 50%. So Facebook is considered a much more global company, whereas, as I say, just Twitter is just based on US. But yeah, I think so far from what we've been seeing, from the amount of sales growth these guys are expected, the market is expecting to have a very, very good day. So it's going to list probably midpoint around $27 from all accounts. You know, our clients are suggesting it could double on the first day, but you know, perhaps that's a little bit optimistic.
So plenty of good things happening at the moment, if you like, in regards to equities around the world, but particularly in the US. What about the next few days in terms of potential risk events? You've got the non-farm, you've got ECB meeting tonight. I mean, do you see these having a large bearing?
Yeah, well, I think, I mean, well, we've got the unemployment number here in Australia today. I think that's going to have, you know, some pretty, well, it could have some reasonable ramifications depending on where that unemployment rate goes, and obviously that's going to be driven by the participation rate. The non-farm payrolls, I think people give that a bit of a cushion given the influence that's going to have from the shutdown. The market's looking for 120,000. The range there, I think, is around 150 down to 50,000. So that's going to be, potentially influenced. But the big things for me now is what happens from at least from a bond perspective, and the influence that's going to have currencies and potentially the stock market, is exactly what comes out of this IMF conference and how the market treats this and what they think will shape this big separation trade going forward between the Fed funds rate and the end of QE. So that's interesting. I think you've got to look at China. Of course, we've got the trade balance numbers tomorrow, the CPI numbers over the weekend. The CPI numbers get that much more bearing than we've had over the last 12 months because the PBOC are looking at inflationary forces coming through and increased inflationary forces and are prepared to look to tighten in the fourth quarter on the back of them. So that CPI number is expected to tick up to 3.3%. Anything above that could be a big Aussie dollar negative. And then, of course, you've got the third plenary meeting over the weekend, and that could have some major ramifications. I think there's going to be a huge amount of detail coming through of headline policies that they want to enact over the next decade. There probably won't be any of the finer details which the market's going to be looking for, but of course, given how China's influence on the world and how the setting of these third plenary meetings have been over the last couple of decades, this is something that we'll be talking about for the next couple of weeks for sure.
What about your calls, IG calls for the market open today?
Weaker open, James. I mean, of course, the ASX was up. The S&P was up, and that's usually a good indicator. But we've got to remember that ANZ's paying a 91-cent dividend today, and NAB's 97-cent dividend. So that's about 19.8 points coming out of the index today. So that will fall by that amount on open. We've already taken that out of the market, so we are expecting the index to open at 54.30. So that's down about 13 points. Whether or not the market can be bid up from that level will depend on some of the commodity trades. I think if you look at iron ore again, it was up a little bit last night. Fortescue's looking really, really strong at the moment. I mean, it's trading a couple of standard deviations from its 21-day moving average, and looking like a stock that is on fire at the moment, as is Mount Gibson and a number of other stocks in that space. So I think materials looking very good at the moment. And BHP's ADR is probably up about 8 cents at the moment. So it's all about banks and whether they can recover and actually put on gains or recover from the going ex-dividend. So a bit of a headwind, of course. So don't be too upset when you see those stocks falling by quite a considerable amount on open there.
I'll try not to. Chris, thanks very much. Appreciate it.
Cheers.
As Chris made mention, big day economic data-wise. The jobless rate does come out, and as expected, it is expected to drift higher despite the recent pickup in economic data and consumer and business confidence. Unemployment rate forecast to rise to 5.7% from 5.6% when official labour force figures are released. The number of people with jobs